Can you transfer property income between husband, wife, or indeed civil partners? Yes, but how? Well, that's a great question, and that's going to be answered in this video. Afzal, I hope I'm saying this correctly, Afzal, he says, I own buy-to-let property in my sole name, which a lot of people do.
Absolutely.
To be fair, still, I mean, it's, I know people talk about limited companies is the only way to Essex, or is that a different program? Not sure. But my wife currently does not work. Which is really interesting from a tax angle.
It is.
I was told by a firm that doing a deed of trust or deed of assignment can help me assign half of my rental income to her. Mr. Trick, I think, turning to Yoda by mistake there. This would make us more tax efficient as I'm a higher rate taxpayer. The rental income gets paid into a bank account. Is it true? Would HMRC object to this arrangement? Well, actually, Afzal's accountant said 50%. Go on, Louise.
I'd go 99%, quite frankly, as long as that isn't going to push her into a new tax bracket. I'm guessing from what you're saying, if she's not working, perhaps there's not a large amount of income flowing to her name already, or certainly if you were to look at 99% of the rental property profits, if they fall below the basic rate tax bracket, which of course is that magic 50,000. I know it's slightly different from that number, but just rounding it to keep it simple. If you were to give her 99% of that profit every year and it kept her below the £50,000 allowance, then actually, if you're already above that, then that's the bigger opportunity and the bigger win, I would say. But there's, as always with these things, you've got some, serious paperwork to get done, and you've got to follow due process as well. So go take some really strong guidance on how to do that. But that's a great way, and one of the ways that we love to maneuver tax minimization strategies very quickly for our clients.
Yeah, I mean, it's interesting, isn't it, in terms of the whole thing about can I transfer income from my assets to someone else? And one thing that I had a question with HMRC a long time ago was, well, if I wanted income from a bank account to be transferred to a lower basic rate taxpayer instead of a higher rate taxpayer, as an example, even HMRC said, well, if you change the bank account details, so it's in that person's name and the money goes into their bank account into the form of interest or dividends, then there's no argument that it's their asset. So why shouldn't they enjoy the spoils, as it were, and therefore get a fairer tax treatment? Yeah. And that came from HMRC. So, anyone coming in whose accountant is a bit worried about that, then that came from the horse's mouth. I'm not sure you could say. It does begin with a H. Maybe that's what HMRC stands for.
Dear, the jokes are getting bad again already. We're 5 minutes in here.
We're only 5 minutes in. But a deed of trust, interesting enough, I'm not sure if you picked up on mortgages. What things do people need to worry about when it comes to mortgages and lending perspective?
Well, this is why I said due process. So Afzal, we're making some huge assumptions here that there might be a mortgage on the asset. And for those listening in, thinking about doing this as well, jumping on this idea, if you have a mortgage in place, it's really, really important that the responsibility for the debt does not maneuver and move round with the movement of ownership of the asset. And the reason for that is because it can trigger stamp duty land tax. So the person taking on the new debt, if we can call it that, if it hits a trigger point for stamp duty land tax, then unfortunately you could find yourself on the short arm of the SDLT form and the tax due, which is not ideal. And one thing that I will say, and again, it's all about due process and really exploring it for you and your particular situation. Afzal, you've already said it's your spouse, your wife. The good news is when you move assets between a husband and wife, it's about the only wedding present you get from HMRC, but you can move assets without triggering capital gains tax. Sadly, not the same scenario if it isn't spouses transferring assets between themselves. For example, if it's an unmarried couple, or it's a mum to daughter or son to father, anything like that, sadly, not only is it going to potentially trigger stamp duty land tax if you have to move the debt around, it's also going to trigger capital gains tax. So deeds of trust are a fantastic tool in your toolbox, but only for certain situations, for certain groups of people, I'm afraid.
One of the things that on that point is stamp duty land tax. Typically, people talk about stamp duty land tax as a tax charge when you're moving property from one person to another. Mm-hmm. There's also the 3% SDLT, and the 3% SDLT, I think we need to remind ourselves, I'm holding my hands up like I'm a Tyrannosaurus Rex, about to pounce. That's not true. I'm just leaning over this glass table, not trying to make a mess of it. But the 3% SDLT high rate really applies for when you're buying a property. I don't really often see it when you are moving properties from one spouse to another. And there's legislation about that, actually. HMRC even themselves have brought in about 2 or 3 examples, whereby if you do a deed of trust, there's no 3% SDLT. But we're seeing countless number of solicitors. I'm not having a pop at solicitors, but they are costing you thousands of pounds in errors of just assumption that they should charge you 3%, but they shouldn't, should they?
No, they shouldn't. The 3% doesn't apply, and it's categorically confirmed as it doesn't apply in the legislation to scenarios where you are moving assets simply between spouses.
Which is a real shame.
You heard it here, folks.
Yeah. And we see it a lot, not just in our own clients, but we see it often in terms of people making paid for tax calls to us to say, look, how do we stop this? Because my solicitors are not listening. Yes. We typically say, look, you have to remember that like accountants in different firms or solicitors, they use juniors. So there are ticks. I don't want to sound really negative, but sometimes they can be a bit box ticking. And as a result of that, they don't understand the form. So they try and apply the 3% SDLT high rate by not really asking great questions. So I think, you do need to challenge them on that, or better still, just use a solicitor who is a property tax specialist. And it's a kind of perverse news, because a conveyancing solicitor is a property lawyer, really, solicitor.
But not everybody does the kinds of things that perhaps our clients are doing, and perhaps you're doing. We saved a client on a paid one-off tax call. We saved them over £15,000 this week, just because of that one issue. The solicitor in question had wrongly assessed that the 3% was due. It was not. We were able to point out the legislation, £15,000 saved immediately.
Yeah, and that's really unfortunate, because I think it puts the client really under pressure. This was a one-off call, as Louise mentioned, and they paid for our time. But did they really need to pay for our time to get that answer when the solicitor should really have answered that? I'm not sure.
It's a toughie. It's a toughie. But you know what? If we're giving people like yourselves the comfort that actually the process they're following is correct, and they're getting every single tax saving they can that's on the table ready for them, fantastic. If we can do that for you, we'd love to.
Before we go any further, I want to explain that there are many live events that you can register for free. There are 4 events that's showing: HK to UK to help people move from Hong Kong to the UK, the Property Expert Panel. If you're a property investor, I'm a property developer, this will be very useful for you. Tax Q&A, if you want to ask proactive tax questions in regards to structures and how to mitigate tax in the future. And finally, UK tax return Q&A, as it says, to deal with questions in relation to your tax returns before you submit it to HMRC. Don't forget that these events are live and will be shown on YouTube the day after. So why not register today, start saving tax tomorrow? Pradipan has said, I said the word, your name correctly this time, but Pradipan has asked about the deed of trust and said, can HMRC challenge it? Interesting enough, on the deed of trust, and I might have to cobble this together in terms of the video, creating a short video maybe for this, but it is a fair challenge, because if you've got a property that is either 100% yours or 50-50 between you and your wife, and now you're moving it to someone else, albeit I gave that example earlier that HMRC themselves told me if you've got some assets, then to split that into that person's name, and then that'd be fair because it's representation. But when it comes to property, it's a little bit more contentious. So what I often say is, well, if you've got someone that is earning 99% of the property income, then the deed of trust must state that the property income goes there. So does the capital, which is something that people really aren't aware of. They just think it's the income, but it's actually the beneficiary interest of the property, which means capital as well as income. So you do need to bear that in mind. And then people's thinking, oh, what happens if we get divorced? I'll let you think that one through. But in terms of that, I think you need to demonstrate that it's in the person's bank account. So rather than it going to a joint bank account, I often say to people, if it's predominantly going to one person in a married couple situation, maybe it's worth setting up a separate bank account and then they spend the money as they want. And then HMRC haven't really got a problem with that. And again, to be honest, a lot of my tax tips aren't mine. They are because I have sensible conversations with HMRC to say, what do we do and how do we safeguard it from an investigation? And they can be very, very useful. And so hopefully that's useful. Anything to add on to that?
The only thing I just noticed is Pradipans asked, can the Form 17 be used by any joint tenants or does it have to be a married couple? So the Form 17 is a document that allows you to tell HMRC about a change in ownership of the underlying asset as well as then the income. It's used in particular scenarios. So it's not specific to, let's say, a spousal relationship. It's more specific to how the asset was first owned and how it's now changing ownership. So don't get caught up in it needing to be a spousal document. The Form 17 is more, well, we're changing the ownership from what was 50-50 to something different. And that's how you use it. And that's when you use it to tell HMRC.
Yeah,
and there's a very tight time scale as well to tell them. So you have to do it within 60 calendar days of the executed deed that you're using, or the assignment document.
Yeah, so that brings me to an interesting one, because we had another pay-for client call who did a deed of trust, and they said, my accountant's not allocating the income in accordance to this deed trust. And I said, oh, well, that's interesting. Well, tell me more about it. And this deed of trust was done in the year like 2000, but they didn't do it. So the property was 50-50. And if you do it 50-50, you have to do this Form 17, which is just a document that goes to HMRC to say we're doing something, a split of income that is not going to be 50-50. It's going to be 99-1 as an example. But they didn't do it. They just did the deed of trust. They didn't do the Form 17. So they didn't notify. And unfortunately, that was nil and void, because HMRC will say, look, you've not notified us within 60 days, therefore we won't allow it.
They went backdate.
Yeah.
They went backdate.
Just an interesting point about this. Louise, a pop quiz for tonight, because, you know, it's interesting to do that. What's a property when it's owned 50-50 called?
Well, you have tenants in common.
Yes, you do.
And you have joint tenants.
Right. So tenants in common and joint tenants. Joint tenants is where you have a property 50-50. Now, if you have a will, well, actually, it doesn't matter if you have a will. A joint tenant is where you own it 50-50. And if one partner dies, it naturally goes to the other partner. But what was really interesting, we did a deed of trust. And what happens with that? It comes tenants in common. So tenants in common, really important factor here. Why? Because it doesn't naturally go to the other spouse. So if you die, you own 99% of the property or 1%, and you hope it goes to your spouse. It doesn't naturally do that. Actually, in law, it basically reverts back to the will. And guess what? This particular person didn't have a will. So it's really important, if you're doing anything like this, is to make sure that your will is up to date and you add your property like this to your will.
I bang on about checking your will once every 18 months to make sure it's still complying with everything that is A, your wishes, and B, your current asset base, because things can change quite dramatically in 18 months. So sorry, I'm getting on my high horse again. If it's been 18 months or longer since you last looked at your will, look at your will.
Yeah, so it's so interesting. I think just anyone listening in, Tim Bishop, who does a lot of our legal stuff, as well as Natalie as well from Galdards, both of them would say that you need to regularly update your will whenever you have a life-changing event, marriage, children, divorce, moving country, that kind of thing should trigger you to think about getting a will. So just as a bit of a nip it in the bud there.